Student loan delinquencies are exploding, and millions are seeing their credit scores crash. Don't wait until it's your score in freefall. Watch this now to avoid the financial disaster no one's warning you about. Remember to like and subscribe for more Money Smart Basics videos. If you have any suggestions for financial literacy topics, please leave a comment. Stay until the end to receive a bonus tip. You did it! Graduation day, diploma in hand, dreams in your eyes. But soon, reality hits. Student loan bills start arriving, and they're anything but celebratory. Suddenly your financial future feels like a pop quiz you never studied for. Miss a payment or two, and it's not just a late fee, it's your credit score quietly dropping. That number, invisible but powerful, can turn your student debt from a manageable burden into a heavy anchor. Welcome to adulthood, where your biggest graduation gift is a debt that follows you everywhere. Your credit score, a 3-digit number that acts as your financial reputation. It's not just for buying a house. Landlords, phone companies, even employers might check it. A high score means trust and opportunity. A low score means higher costs and closed doors. It's built from your payment history, debts, and how you handle money. For new grads, this number is the foundation of your financial life. Start strong, and everything gets easier. Ignore it, and you'll find even simple things like renting an apartment become a struggle. Think of your credit score as the movie poster for your financial life. Lenders don't watch the whole film, they just glance at the poster to judge if you're a safe bet. A few missed payments, like on student loans, can turn your poster from a feel-good drama into a horror flick. But remember, it's just a number, not a verdict on your character. Learn the rules, play the game, and you can shape your own financial story. The goal isn't perfection, it's making smart, informed choices as you start out. The credit score recipe isn't a secret. Payment history is the main ingredient. Missed payments hurt the most. Next is how much of your available credit you use. Keep it low. The longer your credit history, the better. Lenders also like to see a mix of credit types and not too many new accounts at once. Each factor tells a piece of your financial story. Together, they create the number that shapes your financial future. Scores above 800, you're a financial VIP. Best rates, easy approvals. 740, 799. Still excellent. Most doors open. 670, 739. Good, but not the best deals. 580, 669. Fair. Expect higher costs and more hurdles. Below 580, the danger zone. Credit is hard to get, and what you can get is expensive. Even a single student loan slip can drop you fast. That's why protecting your score matters. It's the key to your financial freedom. So, you've missed a student loan payment. What happens next? It's not instant chaos, just a gentle reminder at first. If you pay quickly, it's just a small late fee and your credit score stays safe. But if you don't, the clock starts ticking. After 30 days, your loan is delinquent and your credit takes a hit. Each missed payment drops your score further, like dominoes falling. That one missed payment can start a cascade of trouble that's hard to stop. If you miss student loan payments for 270 days, about 9 months, your loan goes into default. This is much more severe than delinquency. Suddenly, the entire balance is due, and the government can garnish your wages or seize tax refunds, no court needed. Default is a catastrophic mark on your credit, lasting up to 7 years. It's a long-lasting scar on your financial history. Why does one missed student loan payment hurt your credit score so much? Student loans are often your biggest, most important credit account. Payment history makes up 35% of your score, and missing a payment on a major loan is a big deal. One missed payment can be reported as late on several loans at once, multiplying the damage. That's why your score can drop by 50 to 100 points from a single mistake. A student loan delinquency isn't just a quick hit to your credit score, it creates a ripple effect with long-term consequences. It's reported to all 3 major credit bureaus, so there's no hiding from it. Even if you fix the problem or consolidate your loans, the negative mark can stay for up to 7 years. This story of risk can lead to a cycle of bad credit, making it harder to recover. That's why preventing delinquency is the most powerful move you can make as a new graduate. A low credit score makes borrowing money much more expensive. For example, a car loan with good credit might have a 5% interest rate, but with bad credit, it could jump to 12%, costing you thousands more over the life of the loan. Credit cards and personal loans also become harder to get and come with higher fees and interest rates, making it easy to fall into debt. In short, a good credit score unlocks affordable borrowing, while a bad one slams the door shut. A low credit score doesn't just make borrowing money more expensive, it can also determine where you get to live. When you're a recent graduate looking for your first apartment, you're probably excited to find a place of your own. You tour a few apartments, find one you love, and fill out the application. At that point, the landlord or property management company will almost certainly run a credit check. They want to see if you have a history of paying your bills on time. They are, after all, trusting you to pay what is likely their biggest source of income, rent, every single month. A student loan delinquency is a huge red flag for them. If your credit report shows missed payments or a default, the landlord might see you as an unreliable tenant. This can lead to a few bad outcomes. They might reject your application outright, especially in a competitive rental market, where there are plenty of other applicants with clean credit histories. This can be incredibly frustrating and demoralizing, forcing you to spend more time and money on application fees just to find a place that will accept you. It can feel like you're being punished over and over again for a past financial mistake, unable to move forward with your life and establish a home for yourself. Even if the landlord doesn't reject you completely, they may take extra precautions. They might require you to pay a much larger security deposit, maybe 2 or even 3 months rent upfront. For someone just starting their career, coming up with that much cash all at once can be nearly impossible. Another common requirement for applicants with poor credit is to have a cosigner, usually a parent or other relative with good credit who agrees to be legally responsible for the rent if you fail to pay. While this can be a solution, it's often an embarrassing and difficult conversation to have, putting your financial burden on someone else. In the worst-case scenario, a bad credit score can force you into less desirable housing situations. You might have to settle for an apartment in a less safe neighborhood or one that is poorly maintained, simply because those landlords are less strict about credit checks. The dream of getting your own place after graduation can turn into a stressful compromise. This shows how your credit score's influence extends far beyond banks and loan officers. It can directly impact your quality of life, your safety, and your sense of stability, making it a critical foundation for building the independent adult life you've worked so hard to achieve. You might think that your credit score is purely a financial matter, something that only concerns you and your bank. But in today's world, its reach extends into some surprising areas of your life, including your career. An increasing number of employers are now using credit checks as part of their hiring process, especially for positions that involve handling money, have access to sensitive financial data, or require a government security clearance. This is particularly common in industries like banking, finance, accounting, and government contracting. The company's logic is that an applicant with a history of financial trouble might be a higher risk for fraud or theft. Imagine you've aced every interview for your dream job. You have the right degree, the perfect skills, and great chemistry with the team. You get a conditional job offer pending a background check. Then they run your credit and see a student loan default. Suddenly that job offer could be rescinded. The employer might view your financial history as a sign of irresponsibility or poor judgment, qualities they don't want in an employee. It doesn't matter if you are the most honest person in the world. The story your credit report tells can slam the door on a career opportunity before it even begins. It doesn't stop with employment. Your credit score can also affect how much you pay for essential services like car and homeowners or renters insurance. Insurance companies have developed their own credit-based insurance scores. They claim that statistical data shows a correlation between how a person manages their finances and how likely they are to file an insurance claim. While this is a controversial practice, it is legal in most states. As a result, a person with a low credit score will often be quoted a significantly higher premium for the exact same coverage as someone with a high credit score. This means that the financial fallout from a student loan delinquency can make you pay more for the insurance you are legally required to have to drive a car. It feels incredibly unfair being charged more for insurance because you had trouble paying a completely unrelated bill. Similarly, even setting up basic utilities like electricity, water, or a new cell phone plan can be more difficult. the utility company might check your credit and, if it's poor, require a hefty security deposit before they will turn on your service. It's yet another financial hurdle, a frustrating tax on having a bad credit score that makes it harder to get back on your feet. Perhaps the most insidious consequence of a low credit score is the way it can trap you in a vicious cycle. It's a downward spiral that can be incredibly difficult to escape. It starts with one financial problem, like a student loan delinquency, which then lowers your credit score. This lower score, as we've seen, makes everything more expensive. Your car loan has a higher interest rate, your credit cards have higher fees, and your insurance premiums go up. This means more of your monthly income is eaten up by interest payments and fees, leaving you with less money for essential living expenses or savings. With less cash on hand, you become more financially fragile. You have no cushion to absorb unexpected costs. So, when your car breaks down or you have an unforeseen medical expense, you have no choice but to put it on a high-interest credit card, pushing you deeper into debt. This increased debt load further hurts your credit utilization ratio, which can cause your score to drop even more. It also makes it harder to keep up with all your monthly payments, increasing the risk that you'll miss another payment, which would deal yet another blow to your credit score. It's a self-perpetuating cycle of financial hardship. This cycle also takes a significant mental and emotional toll. Constantly worrying about money, facing rejection from landlords and lenders, and feeling trapped by your financial situation is incredibly stressful. This financial anxiety can affect your health, your relationships, and your performance at work. It can create a sense of hopelessness, making it feel like you'll never be able to get ahead. This stress can lead to poor decision-making, as you might grasp at short-term solutions like payday loans, which offer immediate cash but at an astronomical cost, tightening the grip of the debt cycle even further. Breaking free requires immense discipline and a solid plan, which is difficult when you're already overwhelmed. The system, in many ways, is designed to penalize those who stumble. A low credit score doesn't just reflect past financial trouble, it actively creates future financial trouble. It magnifies every financial challenge and shrinks every opportunity. This is why understanding these consequences is so vital. It's not about fear-mongering, it's about recognizing the high stakes. Avoiding that first delinquency isn't just about protecting a 3-digit number, it's about protecting your access to a stable and secure financial future. Student loans can feel overwhelming, but knowledge is your best weapon. Start by understanding exactly what you owe, who you owe it to, and whether your loans are federal or private. Make a master list of your loans, including balances, interest rates, and servicers. Use studentaid.gov for federal loans, and check your credit report for private ones. Set up online accounts and keep your contact info updated so you never miss a bill. Remember your 6-month grace period. Use it to get organized and choose a repayment plan. Take charge now, and you'll be empowered to manage your financial future. If knowledge is your sword, then a budget is your shield. It's not about restriction, it's a plan for your money, helping you cover needs like student loans, while still enjoying some wants. Track every dollar for a month using an app or notebook. Try the 50-30-20 rule, 50% to needs, 30 to wants, and 20 to savings or debt. Automate your payments, especially student loans, to protect your credit and bring peace of mind. Life is unpredictable. Even with the best plan, you might face a crisis, job loss, medical emergency, or other hardship. The worst thing you can do is hide. Ignoring calls and emails won't make the problem go away. Be proactive, contact your loan servicer immediately. They're there to help you find solutions, not to work against you. Federal loans offer options like income-driven repayment or deferment. Private lenders may help too, but you have to ask. Making that call can keep your account in good standing and protect your credit. If your credit score has taken a hit, it's not a life sentence. You can rebuild. Start by making every payment on time from now on. This is the most important step. Pay down credit card balances below 30% of your limit. Consider a secured credit card to add positive payment history. Keep old accounts open to maintain your credit history. With patience and discipline, your score will rise. Every on-time payment is a step forward. We've explored the world of credit scores, how they're calculated, why they matter, and how student loans can impact them. But remember, your score is just a number, not your destiny. Congratulations, you made it to the end of the video. With that, you are ahead of 90% of most people in America. Here is the bonus tip that we promised. If you've stumbled, it's not the end. Every on-time payment and smart choice is a step forward. You are more than a number. Take control, make a plan, and start building your financial future today. The information provided in this content is for educational and informational purposes only and should not be considered financial, legal, or tax advice. Always consult with a qualified financial advisor, tax professional, or legal counsel before making any financial decisions. The creator of this content is not responsible for any actions taken based on the information provided. Investments and financial decisions carry risk, and past performance does not guarantee future results.